Time is running out. We are just a few days away from 6th of April, the start date for the new tax year. It is therefore important to go through this tax checklist that I will be discussing later on in this video. You could be losing thousands in tax savings or making a costly tax mistakes. And so please stay with me till the end. Let's get started. If this is your first time here, my name is Amma, a chartered accountant and a tax professional from AB&Co Accounting and Tax Services. The first on the list is, have you checked your adjusted net income? And if you have, is it below £100,000 per tax year, or is it over £100,000 per tax year? If it's over £100,000 per the tax year, it means you will lose part of your personal allowance. Again, if it's over £100,000 for the tax year, you will also lose your eligibility for tax-free childcare. It is highly important to check this before this date because you don't want to lose your eligibility for tax-free childcare and you don't want to lose any part of your personal allowance. We have a full video about tax-free childcare and how to stay below the adjusted net income to continue to be eligible for tax-free childcare. I'll link it up and also in the description. Please do check this out. The next on the list is, have you checked your tax code? If your tax code is incorrect, it will mean you may be over or underpaying tax. You don't want HMRC to chase you with a huge tax bill after the end of the tax year. And so it's highly important to check your tax code from your personal tax account to ensure it's accurate and that you have paid an up-to-date tax based on your income. If it's not accurate, you need to contact HMRC immediately to correct your tax code. You can also correct your own tax code from your personal tax account. This is important before the start of the new tax year. The next on the list is, have you claimed all allowable expenses? If you are entitled to any allowable expenses, please do claim. Make sure to keep all evidences such as receipts to confirm that expenses were actually incurred. The next on the list is, have you checked if you have utilized your ISA allowance? Remember, it's 20,000 for the tax year. Have you used all? If you haven't and you have money, please use all. It is a tax wrapper, so any interest generated within the ISA attracts no tax. Again, any gain within an ISA attracts no capital gains tax. And so use this tax wrapper to save yourself a tax. The next on the list is, have you checked if you've made enough national insurance contributions for the tax year? This has a massive effect on your state pension, and so it's extremely important to check you've made a full national insurance contribution for the tax year and even for previous tax years. Again, you can check this from your personal tax account. We have a full video discussing how to check your national insurance records, how to check your state pension forecast, and what to do to make sure you fill the gaps. I'll link this video up here and also in the description. It's extremely important as national insurance contributions affect your state pension. Please go and check this out. The next on the list is, have you checked if you have contributed enough pension for the tax year? Pension contribution reduces the amount of tax that you pay. And so it's extremely important to check if you have made enough contributions, especially if you are a higher or additional rate taxpayer. It's extremely important because it lowers your tax that you pay in the tax year. The next on the list is, have you checked if you have used your annual exemption amount for capital gains tax, which is currently £3,000 for the tax year? If you sell any chargeable assets and generate a gain, as long as it's up to £3,000 for the tax year, you will not pay any tax at all. Therefore, if you have any chargeable assets that you want to sell, it's important to do so before the end of the tax date to benefit from your annual exemption amount before the start of a new tax date. The next on the list is if you are a landlord with a rental income and you are a higher or additional rate taxpayer. Have you considered transferring some of this rental income onto your spouse who may be a basic rate taxpayer? This is important because it will save you tax. Imagine your spouse pays tax at 20% and you pay tax at 40%, which means if you transfer some of the income to your spouse, and in fact more of the income to your spouse that pays tax at 20%, you are saving a lot of tax as a household. Consider this before the end of the tax year. If you are a company director and a shareholder, have you considered whether you can delay any dividend payment before the end of the tax date? This is because if you are a higher or additional rate taxpayer, any more income you earn will be taxed at the highest rate of tax, and you don't want that. And so if you have a way of delaying your dividend payment until after the end of the tax year, please look into this and arrange this to save you tax. Again, if you are a director of a limited company, have you checked your director's loan account? Remember, you don't want to pay any tax charges. You don't want to pay any benefit in kind on your director's loan account. It's time to review this before the end of the tax year. If you want to work with us, please use the contact details in the description area. I hope you have found this video useful. If you have found any value so far, please subscribe to our channel and don't forget to hit the notification bell so that you'll be notified anytime we upload a video. Remember, this is not a tax advice, but rather for education purposes. For personal tailored advice, again, please contact us or speak to your accountant and or tax advisor to help you. Thank you for watching.